Hello, Oracles. Well, Tesla took a tumble today, but as we discussed last week, there's a lot of rebalancing that's going on, and there's a lot of analysts that are coming out. And because Tesla has run so much, they've actually been dropping their rating on Tesla, but still going up on their price targets. So you got to pay attention to everything that's going on. We are seeing analysts coming down, like I had said, from overweight to equal weight, from buy to hold, but they've got price targets going up from like 180 to 230, 250. So it's important to take it all into account. But we're going to dive into all of that and where we could see ourselves going after this week in just a minute. All right, so as we had discussed last week, we started this little bit of a downward trend. And with the rebalancing going on, I was saying we may end up filling this gap at 235. Then, depending on how we end up seeing the delivery numbers coming in, may come down and fill this little gap down at 221. So, right now we are heading pretty darn close to this 235 gap. We just need to pay attention to how the rest of the week is going to play out. Daily RSI is now down to 56 in the middle, so cooled off significantly. Now, if we follow the trend that we've been following all year, we could be heading down to that oversold range. If that is the case, heading down to oversold may put us down around that $200 mark. So maybe we fill this gap here, maybe the delivery numbers come in below expectations, and we end up pulling down to there. And then we're going to be looking for a consolidation. That's kind of where we're at, and I think that's what's going to end up happening after we get the delivery numbers. We're going to find that solid space, and then we'll consolidate for about 2 to 3 weeks until earnings, depending on what happens in the macro environment. So now we're going to dive into some of these analyst ratings that have been coming out recently. And again, these are things to pay attention to, and I don't really always go by the price targets because everybody has different valuation models. But when you start to see buy go to hold or price targets changing, I try to take it all into account as to what is transpiring. Now, again, going from a buy to a hold makes sense for an analyst that has a price target that's significantly lower than we are right now, because we have been seeing price targets going from significantly below where we are to where we currently are. And so they say hold. Makes sense. Because if their price target was, say, $350, then they would say absolutely it's a buy because going from 250 to 350 makes a lot of sense. That would be an absolute buy. But it's just different for everyone. And so that's why you got to just take it all into account. And this kind of gives you a better understanding as to why the stock price is moving the way it's moving. Plus, a lot of these analysts are dealing with institutions, and the institutions are doing a lot of rebalancing right now in this last 2 weeks of the quarter. So we're seeing a lot of this rebalancing, some selling. We may see some buying going on at the end of the week. Again, just things to take into account as to why we are moving the way we are moving. None of these movements whatsoever have anything to do with the fundamentals. Just remember that. So first we have Jim Hall coming out. Goldman Sachs' Mark Delaney joins in admitting his price target was way off on Tesla stock. Raises by 33% from 185 to 248, but downgrades from buy to neutral. Mark has generally been bullish on Tesla, but his previous price target cut was extremely ill-timed. See my chart below. And as we can see, just along with a lot of the other analysts that had come out, price targets dropped significantly recently, and now they're all going right back up. So just within the last couple of months, price targets came down, and now they're going back up. This is why I don't always take price targets into account, because they just change them regularly. I try not to change mine too much. I change mine on a fundamental basis. These guys come out here and they change it not so much on a fundamental basis, but it's like they hear some news, some other things, and it's not the same as the way most of us look at it as a long-term basis, because these guys are only looking out 12 months. And then we have Strength Plan coming out tweeting, Adam Jonas is the worst analyst of all time. Longtime Tesla bull Adam Jonas downgrades the EV maker, cites high valuation. Now, realistically, Adam Jonas has been, a little wishy-washy here and there, but this is, again, just a lot of these analysts saying, hey, Tesla's run up quite a bit for the first half of this year. So right now we're at a hold, running up as much as it has, over 100% year to date, and saying just hold the stock versus sell, that's still pretty darn good. When you've run up that much, maybe, and you take a look at the charts and say, hey, maybe we're getting ahead of ourselves, time to cool off and just hold versus buy. That's the way a lot of these analysts are looking at it. So when you're taking a look at the way these people are spinning these articles and whatever they're writing, and Tesla Q coming out having a field day with 4 different analysts coming out in the last week, issuing downgrades, they're going to have fun with it. So let them have their fun. It's okay because you just have to understand why these ratings are changing, but then also remember that the price targets are still going up. So just ask yourself, what are you buying the stock for? Are you buying it for the rating the analysts give it? Or are you buying it for the price and the value of the stock itself? Because if the analysts are coming out and saying, hey, we suggest that you hold the stock, but we think the price is going to go up by 33% in the next year, that tells me it's still going to be a buy in my book. So that's just the way I'm looking at it, but you guys have to make your own decisions. And then we also had Walter Bloomberg come out last week tweeting Barclays downgrades to equal weight from overweight. Price target goes up to $260 from $220. And so, again, a lot of these other discussions that were going on are a lot of these institutions don't have a lot of money in the market right now. There's still a lot of money that they have in bonds and other things as well. So the way they've been making money is with the swings. We've been talking about this year is going to be great for swing trading. Well, one of the ways to swing trade, conservative way, is you buy low, sell high, buy low, sell high. That's typical, obviously not as easy. But a way some other people do it is they will short stocks. So they'll buy stocks when they're down, pump them all up, get them higher up, and then they end up shorting them to be able to make money on the way down as well, versus just sitting there and waiting for the stock to come down on itself. They'll force it down and make money as they force it down. This could be what some of these institutions are doing. They drive it up, realize that some of this news, like all the charging news that has come out recently, is great. They understand that retail investors are going to swarm into that positive news. Tesla's going to the moon. Let's buy, 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 buy. Then these big time institutions come out and say, sweet, there's a lot of retail money in the market right now. Great. We're going to go and short this, take all of that money from these retail buyers, scare them out of it, let them sell, and then we're going to take that money for ourselves. And then as we come down further, as retail gets scared, we'll then buy back in and push it back up. This is how institutions lead the way, and they do it just this manner. They put out these ratings because these ratings have some weight to them. People start to listen to them. It goes into the media. And then because retail investors, some of them, don't understand how all this all works, they take it as reality. They read headlines, they read articles and say, ooh, Tesla's not doing as well as I thought. I'm going to get scared. They don't have that conviction. They sell. Then institutions take their money. It's just how it works. This is why I try to remind you guys to take your emotions out. Remember what your thesis is when it comes to Tesla. And if you're going to be a long-term investor, understand that this is how the game is played in the near term, and you'll just be perfectly fine long-term. And now one of the things that I talk about regularly as well is where are all of the price targets moving? So we've got biotech stock focus tweeting, Deutsche Bank raises Tesla price target to 230 from 200. Guggenheim to 112 from 105, clearly bearish. Goldman Sachs to 248 from 185, but downgrades to neutral from buy. We just spoke about that. So again, we mentioned this before. Even when you see these bearish analysts coming out and raising the price target for Tesla, that is a good sign. That means that the stock is moving in the direction that we want it to move. So when it comes to all the ratings, does it really matter? And just a quick note here on the Deutsche Bank rating. From Sawyer Merritt News, Deutsche Bank reiterated a buy rating on Tesla stock and raised their price target to the 230 from 200 as we mentioned. Deutsche Bank revised their estimates for the second quarter's deliveries to 448,000 units. So now that piece is what is going to play into the price next week. So as we were discussing, there's still a buy rating from Deutsche Bank. Price targets are going up. We're looking at that 235 gap potentially getting filled this week. We've got the downgrades going on, rebalancing going on. But if we're looking at analyst expectations of 445 to 450,000 deliveries, and Tesla comes in below 445, we could see a sell-off going on after the deliveries report. That's just my take on this. But realistically, as I said, when those delivery numbers come out, everybody's just going to plug that number into their valuation model. And if it's lower than what they currently have in there, naturally, their price target is going to come down and there will be a sell-off. Remember, algorithms and computers do the majority of the trading out in the market. So as soon as those algorithms and computers see all of these numbers coming down, they're going to sell off accordingly and adjust their numbers based upon what Tesla has for deliveries. It's just the natural course of things. But remember, that number is still going to be higher than where we were last quarter. That in the long term is still moving up. So don't let the near-term movements dissuade you. It's just my opinion. Take it for what it's worth, but this is how I'm looking at it as a long-term investor and just trying to understand and analyze near-term movements to explain to you guys why things are moving the way they're moving. And so this way you guys can keep your emotions out and invest wisely. So overall, again, I still think things are going to be great for Tesla in the long term. I just think right now we are seeing some rebalancing going on, a bit of cooling off from the run that we've been on, totally natural. We'll see where we land after deliveries this week. And then next week, we'll kind of reassess. This weekend, I am planning on updating my valuation model and all of my deliveries that are coming out with those numbers. So I'll have an updated price target sheet for all of my members and patrons, and I'll share it with you guys in a Teslanaire video in the following week. So this way I can get all my members and patrons in there first, because I like to take care of them first. So otherwise, thank you guys so much for watching. I appreciate all of your support. Let me know how you guys feel about all of these upgrades, downgrades, and things that are going on with Tesla. Have a great one.